One of my members asked me to evaluate Monday.com again, and this is a company that I've had rated as a buy all year long in 2024. And if you've been following it, you'll know that it's up significantly year to date already. And so I think investors are curious to see if it's time to take profits here or if Monday.com stock, if I still have it rated as a buy. So I'm going to revisit this company here, look at their latest quarterly results in terms of revenue growth, cash flow from operations, the net dollar retention rate, which is a key metric I look at when evaluating these kinds of companies. And then I'll compare it against its valuation now that the price has increased so much, and look at a little bit forward to look at its prospects over the next 5 years, what Wall Street expects from this company in terms of earnings per share growth. There's a lot to cover, so let's get into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so let's start with the highlights from the latest quarter. The company generated $236 million in revenue, which was up 34% year over year. And this wasn't just a one-off quarter of robust growth. This company has been growing nicely for several years now and has maintained robust growth in that time. Now, one of the key metrics, the 114% net dollar retention rate. Now, this measures how much an existing customer spends with you in the second year of service. So your first year, you get a customer, they spend a certain amount of money with you. What do they do in the second year? Do they stick around? Do they increase their spending or decrease their spending? This says a lot about a business because it determines if you're delivering good value. It determines what customers think of your customer value proposition. If they think you offer good value, every year they spend a little bit more with you as they get acclimated with your service, as they start to see the value your service adds to their business. They keep finding more ways to add more of your products and services. And so this measure, if it's over 100%, it means the company is spending more than it did the prior year. Now, you'd like to see at least 100% because that means at least they're spending the same amount versus the last year. And if it's more, then that's good, right? And the higher the rate, the better. Now, I'm going to go into a little more detail about this metric for this company a little bit later. Next, free cash flow of $51 million represented 22% of revenue. And the company's cash flow from operations to revenue has been steadily improving. I like to see that metric. And I like to see that the company is firmly in positive territory in terms of free cash flow, meaning it can sustain itself. It can sustain this growth. It's growing profitably. It's growing sustainably. Many growth stocks are growing, but it's leading to more losses on the bottom line, more negative cash flow from operations. And those situations are not ideal. As I highlighted, you can see a longer-term trend of Monday.com, its cash flow from operations to sales. 32.3% in the most recent trailing 12-month period. And if we go back to 2021, that number was at negative 22%. So very nice improvement in this metric. The actual number of 32% is solid, and then the trend is excellent, right? A good number plus improvement. I love to see this from companies, and Monday.com is demonstrating this kind of performance. And you can understand why the stock price has performed so well because the business is doing well, right? North of 30% revenue growth, improving cash flow from operations to sales. That's all great news. And of course, it shouldn't be a surprise that the stock price is up to $288 per share, up from around $180 per share in January. It's been one of my better recommendations so far in 2024. Now, I already talked about the net revenue retention rate. This measures how much existing customers are spending with you year over year. And it's also important to look at new customers. Is the company adding new customers to the fold? And the answer is yes. For Monday.com, 26% compound annual growth rate in customers from 2019 to 2023. That's great news, especially when you combine it with the net revenue retention numbers, meaning they're getting new customers and existing customers are spending more. A nice 1-2 punch for growth in Monday.com's business. 225,000 total customers for fiscal year 2023. That's up from just 90,000 in fiscal year 2019. Now, a couple of things I want to go into more detail about the net dollar retention rate. Number one is they stopped the decreases. So you can see here that their net revenue retention rate was increasing, right, from 104% in the second quarter of 2020, increasing nearly every single quarter all the way up to 125%. That's great news, right? I'd love to see companies in that trend. But then Monday.com was experiencing the opposite of that, from 125 down to 123, 121, 117, 114. So steadily going down. That's not what you like to see, right? But here in 2024, they stabilized that trend. And it's one of the reasons why I recommended the stock as a buy, is because of stabilization of this trend down to 110%. And it stayed there for several consecutive quarters now. When the company reports the next quarterly earnings results, this is one of the key things I'm going to look for is, did they turn this around? Is it now moving upward, or did the fall continue? That's going to be a key when you're evaluating Monday.com. But one of the good things lately has been a slowdown in the deceleration of this. By the way, this decrease in net revenue retention rate in these quarters from 2022 to 2023, I saw this with nearly every tech company, nearly every software company that I've been following. And it's because of the big pullback in business spending during this time. This is when, remember, the Federal Reserve increased interest rates and businesses were fearful of an oncoming recession. So they really pulled back spending in these categories. And they haven't really reiterated spending in these categories or increased spending in these categories. Businesses have increased spending. They're no longer afraid of a recession as much, but the area they're spending more on is artificial intelligence. That's where businesses have increased and ramped up their spending, and other enterprise software that's not directly connected with their artificial intelligence ambitions have seen a less urgent increase, a less urgent rebound. And then if we look more detailed into the net dollar retention rate versus the category of customers, with just businesses with 10 plus users, businesses with $50,000 in annual recurring revenue, and $100,000 in annual recurring revenue, you can see that the largest businesses are now accelerating, right? From 113% net revenue retention up to 114. That's the area that the company is experiencing a re-acceleration in the net dollar retention rate. All right, so looking at Wall Street, they expect this company to grow its earnings per share by 42% for each year over the next 5 years. That's an excellent rate of increase. If the company actually delivers this kind of growth, that would be excellent return for shareholders. Monday.com is trading at a price to free cash flow of 56, which is on the expensive side of valuation, but the company is delivering excellent results that justify a premium valuation, as well as excellent prospects over the next 5 years. 42% earnings per share growth with 56, with the price to free cash flow of 56. Now, I mentioned I've had Monday.com stock rated as a buy. I last had it rated as a borderline buy, which is in between a hold and a buy in my rankings. And I last updated the stock on April 29th. So what do I think of Monday.com stock today? Do I still think it's borderline buy, or am I changing the recommendation? Actually, I'm keeping it the same. I still think the company is a borderline buy. It has excellent prospects. The business is heading in the right direction, but it's also trading at a relatively expensive valuation, which limits my enthusiasm for Monday.com stock. Still think the business is excellent. I still think it delivers good long-term risk versus reward for investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.